Hello guys, it's February 9th, 2018, and it's another market update from the trading plan. We're going to take a look at the major indices, so the S&P 500. So I have a chart of SPY here, so the SPY ETF, and we had basically this reversal hammer candle, and it's sitting right on, if we take a step back here, it's standing right on or sitting right on this uptrend line here. Obviously we're nowhere close to the 2009 uptrend line, so as of now this to me just looks like a correction. I don't see anything bigger coming unless we do break below this line. If we take a look at some of the potential fib levels, obviously if we have a bigger correction, some of these fib levels, so the 246, 234, and 221 will come into play. But as of today, we don't have any, I guess, sign that a bigger correction is on the way. And I guess right now we're sitting at the 38.2 level if we use this as a low. But if we use this one, we're sitting right at the 61.8% level. So at least in the short term, we should expect to see a bounce. The other thing I'm noticing is we're getting this little tiny, if you want to call it a bullish divergence here. And obviously the RSI is also at a low. It's telling me that we're going to have a bounce in the short term. Now, I don't think this bounce is going to go all the way high very quickly. What I expect to see is actually a double bottom, meaning we go up, have a quick rally, make everyone think that the correction is over, but then we come back down to test that low. Now, as long as we stay above that line, even if we come a little bit slightly below, I'm okay with that too. But I think we have to sort of stay there, and then we can go much higher. What I want to see is we make an equal low, and then we form like a divergence on the RSI, right? So we have a bullish divergence here, and then price will start to go higher after that. And the reason I want to see that is because when we look at past corrections, so if we look at this one, when the price made a lower low, we had the RSI which was making sort of a divergence or a high or an equal high, and then we had a move higher. So I think at least for the short term, maybe into end of February, we're probably gonna trade within this range, and then have one more sort of down week or another flush down, and then only the correction will be over. This is as long as we stay above the 252 level. Obviously if we break below that, then we're probably gonna have a much bigger correction. This sort of correction lately sort of reminds me of what we saw in 2015. And so if we take a look at the correction, so we had this quick sort of flush, we had a double bottom, RSI was moving up, and then the stock went up. So this correction was much bigger, so even after we bounced higher, we had another sort of correction, and we got another double bottom, had a divergence, price went up. So I don't think we're going to get some a correction that big, because obviously the correction we had in 2015 was different, because we took this almost a year to form a topping pattern, and that's why it took longer for it to bounce higher. But if we compare that to what we saw today, we had this big uptrend which we didn't have that many pullbacks along the way, and that's why we had a quick sort of move down to flush some of this excess bullishness, maybe just spook some people out before it does go higher. If we take a look at the 2011 correction, so this is similar to what we saw in August 2015. We had a head and shoulder pattern, we broke below the neckline, and if you want to call this a double bottom, we had sort of a low. RSI was pointing upwards, and then we had another uptrend. Also similar is what we saw in 1998. Price came down quickly, had a double bottom, and then the uptrend resumed. So obviously the only difference between these corrections is we came down 10% in a very short time. So this one obviously took, you know, longer to form. The other, so this chart is 1987 crash. So obviously it's looks a lot different, but the idea is the same here. You know, after you have a big sort of swift move, you tend to have a little bit of a bounce, and there's always sort of a retest of that low, and that is when I would be interested into buying stocks longer term. As long as we hold those lows and not break below it, I think we do still are bullish in the medium to the long term. And so that's the reason, you know, I'm looking for some sort of a little bit sideways action in the short term and a retest of the low. So we'll stay tuned for more videos. Thank you guys for watching. Have a good weekend.